Ah,
Welcome everyone. My name is Sunil Kumar from the Indirect Tax R&D team of Taxman. I welcome all of you for today's webinar on GST transitional credits, disputes and way forward. We'll start our webinar in few minutes. Just a quick background about Taxman. Taxman is the leading publisher on tax and corporate laws in India. We maintain the largest and most accurate online database on income tax, international taxation, GST, company law, etc. Uh, our product, our books, journal, online, offline research platforms. We have also developed national website of income tax department and also maintain the same. So just a quick tips for the attendees. Your mic would be mute during the session. You will not be able to communicate during the session. However, you may post your question in the chat box, which is given on the right hand side. Your questions will be answered by the speaker during the session, and our R&D team would also be going to support you with your questions. After the session, you will be getting the copy of this presentation as well as a beautiful ebook prepared by the Taxman team. So the topic of the today is a transitional credit. We would be deliberating on transitional credit. The focus primarily would be on whether Tran 1, which was not filed or filed incorrectly by the taxpayers, can it be filed or corrected after the time period prescribed under the GST rules or not? In simple terms, I would say, can a taxpayer claim missed out transitional credit after the time limit prescribed in the CGST rules? It is difficult to answer this question in a single line because this issue requires deliberation of so many technical points, like whether transitional credit is a vested right or not, should it be seen as a concession to the taxpayer or not, the time limit which is given in the GST rules, is it sacrosanct or not, uh, whether benefit allowed by department by virtue of rule 1171A in respect of technical glitches, is it not against the principal equality for cases where there are genuine cases apart from the technical issues on the portal? What is the impact of the retrospective amendment made by uh, the government under section 140? How judiciary is seeing these questions? So we have today Mr. S.S. Gupta with us. Mr. S.S. Gupta is a chartered accountant, cost accountant, and company secretary by profession. He is practicing in GST and erstwhile indirect tax laws. He has authored various books on indirect taxes, including GST, How to Meet Your Obligation, and these books are published by Taxman. He has also contributed towards various articles, journals, and has been a regular faculty member for seminars, lecture organized by ICI, ICAWI, IMA, and IMC. So Mr. Gupta would be discussing the overall controversy on this issue and enlighten us with his view. Sir, over to you, please.
yeah. Start the presentation. Ah. Sunil, thank you very much for nice introduction and welcome everybody on this webinar on transitional provisions. The GST has passed 3 years. It started on 1st July 17 and now in almost July 20. The credit which is supposed to come in July 17, many of us are fighting to get that credit. The credit should have been a simple form because we are in a VAT regime where only value-added tax is taxed. If the credit itself is denied, then there will be a tax on all inputs. The tax will have to be paid again. And this is an ongoing process. We are fighting with the department, with the portal for credit denial. And the main reasons I will definitely deal with in my slide presentation is it seems that there has been a lot of haste in introducing this, and before every taxpayer could understand what is happening in Tran 1 and how to file this, all this, the time period was expired. Therefore, the government had to go on increasing the time limit time and again. However, they have increased the time limit with a lot of restrictions, and that is why people have to rush to the court. There was no order passed, therefore lower authorities could not do anything, and you find that a lot of writ petitions are there, and every judges also, some high courts have said it's a vested right, some have said it's not a vested right, it's a concession which can come with certain condition, and ultimately matter has approached Supreme Court. Now friends, one can understand that to get your own credit, in the erstwhile rules, if you look at slide 1 on your screen, there was many tax were there, but mainly excise duty and service tax was imposed by central government. Excise duty on manufacture of goods and service tax on services, rendering of services. Sales tax was levied by the VAT by the state government. State government also levied entry tax, CST, etc., etc. All of these act provided for permitting of credit on input services and capital goods. The concept of permitting the credit in excise is well back from 1968, when Morarji Desai had presented the budget. He allowed what is known as the pro forma credit under Rule 56A. And then the matter went on expanding. In 86, the VP Singh then expanded it to put it MODVAT. Then again in 94, we had the service tax. Initially, there was no credit was permitted for service tax input services. Then this was expanded again to permit the credit for input services. And VAT, again, the same credit provisions are there. Which means every statute provided for permitting of credit to the SSE. And if the VAT system has to be implemented, the credit needs to be permitted liberally. If there's a lot of restriction on the permitting of credit, for whatever reason, whether it's a glitches in the portal or whether a misunderstanding of the taxpayer, ultimately what the government should look at it, that whether genuinely that person is entitled for a credit or not. And you'll find that most of the writ petitions which have been filed, not a single writ petition government has said that he is not entitled for a credit on merit. Now that should be the approach of the government if you want to implement smoothly seamless credit. And the seamless credit, when we say, if your en bloc credit itself is not allowed at the first stage, I mean, you can understand the position which a person will have to go through. More particularly because in many cases, credit forms the 70 to 80% of the output tax. And there, if you're not permitted a credit, then your payment of GST for the initial month of July, August, September and all, you arrange a separate finance if you want to make the payment. And if you don't make a payment for 1 month in July, then naturally you can't make a payment for August, September, etc. As I said, all these acts provided for the credit, availability of credit to the registered person, and every person was required to file a return. In excise, it was ER1 return. In service tax, it was ST3 return. In VAT, there was, as per depending on the state government, different type of returns were there. The frequencies of the return also differed depending on a small taxpayer, large taxpayer, etc., etc. All these returns provided for in this format, how much of credit you have taken, how much of credit you have utilized, and what is the balance of credit left with you. The credit balance which is left with you should be allowed to be carried forward. The government felt that on a particular day, that means say 30th June 2017, a service provider, manufacturer or a VAT registered person will be able to take all the credit available to him on 30th June. And that is the fallacy which the government made. I mean, we know the working of the industry. It is never possible that on a particular day, you take an entire credit of all the input services which have been received till the date. There are various reasons for it. some corporate internal controls are there. The law itself permits of raising of invoice within 30 days from the date of rendering of services. And therefore, and then after raising an invoice, that invoice has to travel to the service recipient or the recipient of the goods or services. Now, this presumption that on 30th June 2017, everybody will reflect the credit in his ST3 return, in his ER1 return, in the various VAT returns, and therefore, whatever I will permit the transfer of credit, that should be sufficient provision for the purpose of migrating the credit to this. That I think is the basis problem, main problem, and now we have dealt with this. This is also in you have in the service tax in excise. The excise duty was levied on manufacture of the goods and was levied at the price at which goods are sold by the manufacturer to the first person. Thereafter, once the first person has sold the goods, there was no excise duty being levied. So the manufacturer had the stock of, and those duty paid stock was subsequent to 1st July attracted GST. Earlier it only attracted VAT, but subsequent to 1st July that attracted GST. That means both CGST and SGST. For example, say you are a manufacturer having a factory in Gujarat and depot in Rajasthan, depot in Madhya Pradesh. You will have some stock at the depot in Rajasthan, some stock of the goods in depot at Madhya Pradesh. Now those goods were duty paid, no doubt. The evidence was also available in the form of excise invoice or other documents. But at that point of time, you are not taking credit. And hence the rule also provided, section also provided, that on that stock, which is available with you, the credit can be taken. The restrictions are put for 1 year and all that. But that again is a restriction. I don't know why the Gujarat High Court has held otherwise. Then there are certain areas where the goods manufacturer were exempt. Now, as on 30th June 2017, all exemptions were withdrawn. Subsequent to 1st July 2017, every manufactured goods in those areas attracted excise duty, attracted GST. Therefore, it is natural that the credit is permitted to the manufacturer for the stock he had, and he may have these. He will have a duty paying document to substantiate that on the input services which is availed and utilized, the duty paying document is available. That also law permitted in this. Now this is a summary of various sections which is there. I have just narrated these sections for a summary purpose. We will deal with each one of them in a greater detail as we proceed further in our seminar. First one was the transfer of credit. As I said, whatever is reflected in your return, that was allowed to be carried forward. That's subsection 1. Second one was the goods which are not availed prior to the capital goods. As we all know, in excise duty, the capital goods credit was permitted in 2 years' time, 50% in the year of receipt and 50% in the balance period, subsequent year. So if you have received the capital goods before 30th June 2017, you could have availed the excise duty credit on 30th June 2017, 50%, and subsequent to 30th June 2017, balance 50%. So that balance 50% credit was permitted here in 142. 143 is regarding the stock of input, work in process and finished goods. I already explained that manufacturer has a depot in their in various locations where subsequent to 1st July the stock was chargeable to GST, and therefore it was natural that the excise duty credit was also available. Then you have the exempted product, which also I explained to you. Then next is input and input services in transit. I will be dealing in detail of them. Summarily, I am just explaining this. Input may be in transit, like 28 June, somebody has removed the goods from a factory and it reaches to the manufacturer on 2nd July. The earlier person has paid the tax before 30th June 2017, but the manufacturer will be able to take a credit only on 2nd July 17. And therefore, this also permitted this section permitted. What is input services in transit is really difficult to explain this. But nevertheless, the section uses the word both input and input services. Registered person paying tax at a fixed rate or fixed amount, that is a composition scheme if you are paying the tax. Now there is a composition scheme in GST, but those who don't want to opt for a composition scheme in GST, they were permitted that you can take the full credit of the stock and pay the tax at the full rate. That is again a concession given. ISD credit to be taken. Now this is again a very big issue here. In service tax, the input service, many were registered as input service distributor. How the balance in input service distributor will get transferred to a new regime was never clarified by the government. And it is in the portal also, which we'll deal in the subsequent slide. There was no clarity as to what the balance is to be put in which table. Then transfer of credit when centrally registered. Service tax permitted the centralized registration of the service provider. So suppose a bank like State Bank of India was centrally registered in Mumbai for all the branches it had. In GST, it is state-wise registration became mandatory. Therefore, the credit which is available in head office needed to be divided into various states, and the law permitted that, provided the returns are filed, all conditions are put in, and reversal of credit within if you are within the prescribed time. Earlier statute provided in case of service provider, the amount has to be paid to the service provider within 90 days from the date of invoice, and if it is not paid, then the credit has to be reversed. But law also provided that as and when you make the payment to a service provider, you can take the credit. The time limit was not prescribed, but this section prescribed the time limit for the purpose of availing a credit. It provided 3 months only period for making a payment. Now, question that comes up, we have seen broad provisions. The issues which arises, tremendous problem which are coming up in the availment of credit. What are the reasons for this? So these are some reasons I have highlighted. The issues can be divided into two. One is provision interpretation, and second is glitches in portal. They are summarized below. As I explained to you, that whatever credit you have taken in ST3, in case of service tax, in year 1 in case of excise duty, and in VAT different returns, that was permitted to be carried forward by automatically by the portal. Once you file a declaration, it will be reflected into your electronic credit ledger. Now this fact was also not known because there was no instruction from the department that how you fill up the Tran 1 and what if you indicate a detail in a particular para or particular table, how it will get reflected in the electronic credit ledger. Now that's why I mentioned earlier that government assumed that on 30th June 2017, all the credit will be reflected there. There are many things. We all know in a corporate world, as on a particular date, it is impossible for anybody to say that all credits have been taken. And therefore, you find when you make a balance sheet on 31st of March, you always make certain provisions, and provisions are estimated basis. You can say there will be current liability of so much, estimated to be so much, and for purchase of goods in transit, for input services, because you don't receive the invoice at that point of time when you are closing the accounts. And such provisions are accepted accounting norms where the expenses is debited and the provisions are made without explaining, without identifying the service provider or in name of the supplier. And that's why the account get more or less correct picture. But when you avail a credit, there is no question of any estimated credit to be taken. That so many input services will be in transit, and therefore I'll take the estimate credit, or so much goods will be in transit, estimate credit. One who understands the large corporate, they will always remember that an accountant who ultimately takes the credit in the ledger or in the annual in the return of the company return prescribed return under the statute, receives that gets the credit after the bills have been or invoices have been passed by the respective department. For example, advertisement bills. Now, advertisement bills first will come to the marketing department. Marketing department only knows what order he has placed to advertise the product in a, say, GTV channel or Star TV channel. The Star TV and GTV will mark the copy to them. The person has to verify, and after verification, he passes whether entire amount or plus minus whatever it does. He passes that amount, and then the amount goes for the accounting. When it goes for the accounting, at that point of time, the credit is taken in the ledger and ultimately reflected in the accounts, ST3 return or whatever return is being filed. Now, there is always a time lag. In a continuous business, there is no problem. The May bill which is received, I have taken a credit in July. And it's a cash flow issue, but every industry understands that it is impossible practically that May credit can be taken in the May month itself. And therefore, you find that many cases, the companies have taken the credit. I mean, could not take the credit as on 30th June in the return. Because ultimately, return has to be filed, return has to be uploaded by the excise duty by 10th of month, by service tax by 20th of the month. If anybody has not taken a credit on that in ST3 return, it naturally happened that that credit will not be reflected in your Tran 1. Then question comes, what is to be done with the credit? The government provided for a refund mechanism. Now see, refund mechanism, you all aware, it's very difficult to get a refund. And you sometimes you have a credit of each invoice may have 20,000, 25,000 rupees, and you go on making a refund claim. There are lakhs of refund claims being made on this count. So that is one problem which came. Now, in second case, reverse charge mechanism. The law, service tax law itself provided that reverse charge provided for payment of tax on a reverse charge basis by a service recipient. In case of reverse charge basis, the tax was not payable on receipt of the invoice. The tax was payable if when the amount has been paid to a service provider, within 60 days. So if you have received the services in the month of May, say you received the invoice on 31st of May, and you're going to make the payment on 25th of July because you've got a credit period, the liability to pay the tax itself arose on 25th July. And therefore, many have paid the tax on 25th July, and they could not have taken the credit in the June month return because the tax itself was paid in July. And that also, I mean, again, as I said, there is a provision for refund, but all of us know that refund, how difficult it is to get. And initially, there was so much hassles as to regarding the jurisdictional problem. I mean, your SSC as a SSC, you are being SSC jurisdiction is with the state government or with the central government. I mean, people have to run here and there to find out where we are registered, who is our jurisdictional officer. This refund also became a problem. These are two main reasons why the tax problem at person could not reflect the entire amount of credit. The further the bifurcation of credit balance in different states. As I said, in case of centralized registration, the consolidated amount of credit was available at a place where the person was centrally registered. But in GST, he had the option to take the entire amount in the particular state or distribute that amount as per his choice. The law did not prescribe any formula. As per his choice to various states. Now, there was no clarity as to how to declare this amount in the return, in the Tran 1 return. Many have made mistakes. Whether total credit amount is to be reflected as explained in ST3 return or bifurcated credit amount is to be reflected. For example, your ST3 return reflects a credit of 20 crores. Now, should we declare 20 crore in the return in table of Tran 1 and then gives a breakup as to different registration where it should be reflected? When the Tran 1 was made, the government did not issue any instruction manual as to, by giving example, what information to be reflected in which column of the Tran 1. And therefore, many have reflected 20 crore as the total amount, and they have got the credit in 20 crore in their one return, and so on and so forth. I mean, these are problems which are being faced. But in other locations, they did not get the credit. Then the erstwhile STC return permitted the revision of ST3, but the Tran 1 once filed did not permit the return, did not allow the revision of the Tran 1. So it got stuck. Now, if you have taken a higher credit, if you have taken, if you have taken a higher credit in the revised Tran 1, then that revised amount could not be reflected in Tran 1, and therefore again the difference how to take the credit is an issue. This input service distributor, the section provides 147 provides that if you are receiving an invoice of ISD subsequent to June 2017, you can take a credit of those invoices in ISD. And table 7B of the Tran 1 also provides that. You will find 7B that there is a declaration to be made for invoice number, amount, etc., etc. But what happens to my closing balance? As on 30th June 2017, I have a closing balance. Where do I reflect that balance? Once you reflect that balance in say table 7B, you do not have the invoice number. It's a closing total amount of balance. And therefore, there is a chaos as to where to take that credit. And still, we do not know where balance credit is to be taken, because once you declare in Tran 1, it hits your electronic credit ledger as per section rule 117, and this cannot hit the electronic credit ledger of a particular state. It has to be distributed to all the states. And all this came up because of the fact that the credit was there is no instruction given, instruction manual or instruction trade notice, one can say, by which these all points were clarified. The next one is more important. You see, everybody got the provisional registration or based on the entire amount your earlier registration. Now, if you are registered, earlier registration was in case of excise, unit wise registration was there. In case of service tax, there was centralized registration or promissory registration. If suppose in excise you are registered for Gujarat, 3 factory you are registered in all the 3 factories. Now you got the provisional registration for one of the factory, because in GST only one registration was required. This for a state, all the 3 units taken together had needed one registration. So therefore, that also, once you got the registration from one factory, the database of the GST only had that factory as a registered premises. To explain you example, suppose you have a factory in Surat, Ankleshwar and Baroda, and you got a provisional registration from the Surat factory. The database did not reflect the Baroda factory and Ankleshwar factory. Now, when you file the Tran 1 return for all the 3 units, it only migrated the credit balance of your Surat registration. It did not migrate the credit balance of Ankleshwar and Baroda. Why? Because the database did not have this. Now, actually, government was, as per rule, one was required to file RG 26. And in RG 26, one could have declared the entire details. But then the government in a haste, without people filing RG 26, granted a final registration, and therefore these data were not reflected in the return, in the database of the GST. Then there were the eligible duty issues. We all know amendments have been made. Now, all the above issues, then along with this, there were glitches on the portal. There have been number of cases, writ petitions have been filed left, right, and center, whereby it is time and again said, and court have also accepted it, that there was bandwidth was not proper, it was hanging, and the instructions are not clear. After submit, when you make a submit, you have to give for further follow-up instructions, and all these led to what? Either a credit balance was not carried forward, or partial credit balance was carried forward. And further, as I explained to you, that the credit which you have taken subsequent to 30th June, the refund application. Now, refund application is being filed everywhere for the purpose of availing a refund of the credit balance. And then further, it was also, many have taken the credit in the 3B also. Ultimately, if the way government, if the way department is going, if that way it goes on, there will be spate of show cause notices. Luckily, today we have Sunil, you are there? Hello? Hello, Sunil?
Yes, sir.
I just see these slides are not coming.
Okay.
Presentation just correct them, no?
Okay.
सुनील जी वो जूम हो गया पूरा, उसको जूम इन कैसे करते हैं? बड़ा हो गया सब कुछ हमारे।
Sir, are not you able to see the slides, or what's the issue? Can you please explain?
No, slide I am not able to see. ये zoom बड़ा हो गया ना एकदम से, तो
Just wait for a second. Just wait for a second. Let me check.
Participant can see the slides.
Just wait for a second. Let me check this. So you can continue. The participants would be able to see the PPT.
They'll be able to see the
It's running.
PPT. Acha.
Yeah.
My slides are up and down here. See, as Mr. Sunil mentioned about the various issues, and I also mentioned about the issues why the credits have not been migrated. First and the foremost problem is technical glitches on the part of the portal. The matter has traveled to the court, and number of high courts have repeatedly stated that with the documentary evidences that the because of problem in the portal, the person was not able to fill up the form, and therefore the information credit has not been traveled to his electronic credit ledger. One such cases, we have highlighted these cases in our summary. Chogori India Retail Limited, Delhi High Court issued the order that please reopen the file, reopen the portal, and they have been reopening only for a limited purpose, wherever there's a technical difficulties. Now one doesn't know what is technical difficulties. I mean, you substantiate with the help of that you try to upload the information could not be uploaded, then you made a complaint to the desk officer and your complaint number and all that you substantiate, then they will open the portal for you. In some cases they've done that when we are able to substantiate, but as I said, to assume that everybody will file it properly and will have a proper bandwidth in each location. Today internet is there problem, but in cities, yes, in the remote places, in villages, you have still problems with the internets and all. Therefore, the court said technical glitches or not, person doesn't have to substantiate. You please open the file and open the portal and do it. And one such matter is Chakori India Retail India Limited, where after Delhi High Court order, the department has gone to Supreme Court, and the Supreme Court has also affirmed that they dismiss the department's appeal, and therefore that matter now is rest. The next issue is whether the filing of Tran 1 is a mandatory or directory, is a procedural nature. Now there, one, as I mentioned to you in my earlier speech, that the filing of Tran 1 is ultimately one has to substantiate that he is entitled for a credit, and he can substantiate with two documents. One is his ER1 return in excise or STC return in service tax, and others what the credit he could not reflect on the invoice, on the return, because of the time lag. As I explained, various reasons: RCM payment, invoices being received late from the supplier, invoices and pipeline at the corporate level. Now these are various reasons why the credit has not been. Now one failed to understand that when you are provided for a refund mechanism, that you go for a refund mechanism, get the refund, people have got the refund also. It's not that people are not getting a refund, but they have to do a lot of exercise on that, and many commissioners have not permitted the refund. He says it is not permissible, and there an appeal is going on and all that. Once it is there, then why can't you simplify and permit a person and allow a window in GSTR 3B that whatever credit you could not take, you take it now and give a separate letter or a separate mail to your jurisdictional officer that this is the reason why I have taken a credit. And one such judgment is SRC Aviation, where it has said, Delhi High Court has said, it's a procedural nature. And therefore, even if he has not filed it and is reflected in 3B, then that is also all right. And when you reflect in 3B, you verify whether he is really entitled or not. Having said this, once the audit starts, after the returns have been filed in February 2020, annual return have been filed, the audit because of Corona has not started. Once the audit starts, you will find that a number of show cause notices will come up saying that you are not filed Tran 1, and Tran 1 is mandatory. And unfortunately, we have a lot of judgments from various high court. Delhi High Court and has been very active, but other high courts, as I said, they have said this is mandatory requirement, and the issue and if you are not filed, you have missed the timeline. Sorry, you can't take it. This matter needs to be fought. See, problem is that whatever credit you had, just because, and that is your money available with you, just because you have not followed a particular procedure, can that credit be disallowed in a VAT system? And more particularly when you are not challenging the availability of credit to that person. So this is the second judgment which we have on the SRC Aviation. This brand equity is a much talked about judgment, and there the Delhi High Court has very nicely dealt with all the provisions. Although I must say there are judgments against, contrary to this finding, in Bombay High Court, Chennai High Court, in the recent one of PR Money Electricals, and Bombay High Court in Nelco's case, they are against this. The matter has gone to Supreme Court. It's a simple question is whether it's accrued right or it is a not accrued right, or it's a concession. Friends, as I said, if one has to implement the VAT system properly, which GST is one of the VAT system, then government must be very clear that you look at substantive availability of the provision. Whether substantively credit is available or not. The person has to run up to Supreme Court to get the credit. I mean, litigation cost and the uncertainty over availability of credit is really hurting a business person. And therefore, they should sit down and say, those who are not make a special task force, those who are not been able to file this, now 3 years are over, everybody knows whether he is filed or not filed. Please make a special cell in each zone of the commissioner, each zone, and then ask him to file his application. And whether credit is allowed, available to him, then he should be permitted to either reflect in 3B or make a separate window in your return, in your electronic credit ledger. That way, the issue can be resolved amicably between trade and industry. Otherwise, going to Supreme Court and various litigation, it's an endless thing. And it will depend upon the judge. If the judge holds that it's not an accrued right, then everybody has the problem in availing a credit. So let us await that. But we would request the government to give some administrative concession, because this being the first time, and more particularly, there was no manual available, no instructions available at the relevant time as to how to fill up Form 1, Tran 1 and all that. So therefore, but however, Delhi High Court has held that Senvet credit is an accrued right and vested right. The same cannot be taken away by delegate legislation. The time limit is not mandatory. Further, it is not a concession. It's a property of the person. Like you have a bank balance, same way you have the balance in the Senvet account. Now you can't say bank balance is not withdrawn for 3 years and therefore you can't withdraw it now. And that approach should not be taken when we have to look at the ease of business. Again, the same judgment of adult technology. Tran 1 is procedural in nature, and you are not allowed. You should be allowed to take credit. I mean, as I said repeatedly, that one has to see substantially whether credit is available to him or not, and that government can very well verify and satisfy himself. These are a summary of judgment which are made out here. Now you have, as I said, SSC has paid tax under RCM in GST. And after filing Tran 1, where the SSC will be able to claim credit in GST at 3B or not. Section 142 has permitted the credit, and people have filed the refund application also. There have been two views from the department. Some of the authorities have understood this, that A, he is entitled for a credit. In normal course, if the same provision would have been continued, you would have reflected that credit in either ER1 return or in the STC return. But now those provisions are not available, and therefore you have to give the refund in cash. Now, what the other, therefore many have got it also, and there are tribunal judgment to that effect that you give him the credit. Either you give him a credit or you give him a cash. But what other view is that arrest while provision, that is arrest while service tax or Central Excise Act, never provided for refund of credit in cash. And therefore that one has to see the availability of the refund in cash in the earlier section, and only if that is permitted, then the credit refund can be allowed in this. And that is not the correct approach. 142 section is been specifically made to permit refund in cash, but then for that also you have to go on fighting, and sometimes the amount for each invoice becomes so small that it is not commercially viable to contest such cases. Transfer of credit balance. Now again, there's a big issue on the cess, whether the cess which is allowed to be, which is you had reflected in the ER1 return or in a service tax return, can you carry it forward or not? Is a big, the department had no intention to permit it to carry it forward when the cess was withdrawn. the representation were made that this will allow this cess amount to be merged in the basic credit. The department did not permit, and such amount get reflected in the various accounts of the companies. If it is not permitted, they will have to write off and claim as an expenditure in income tax. However, the government, to make its intention very clear, has amended the law retrospectively. This is something very bad. That from 1st July 17, the law has been amended to disallow the credit of refund, carry forward of credit. Whether cash refund of that will be permitted or not, again, is a question. We have contrary judgments. We have judgment from the tribunal which says that, which are reflected Bharat Heavy Electrical and others, which is stated that the credit refund will not be available. There is no mechanism because arrest-well rule did not permit the refund in cash for such cess. However, in case of Sutherland Global, Chennai High Court has said there is no specifically lapsing provision. There is no provision made by the government that you have to lapse the such credit balance available with the person, and lapsing provision having not been made, how can you now not allow him to carry forward? As regards utilization of the this recess, the Chennai High Court has also observed that this utilization also is not barred now. Earlier, there was a specific provision that the utilization could be made only against the payment of cess. But now that statute is not there, therefore such provision is not barred, and hence we permit the refund in cash. Again, as I said, one will have to go on contesting this, and the matter will travel only when the Supreme Court decides it. And I'm sure after Supreme Court decide in favor, the government should not retrospectively amend the law. The next issue is difference between the amount of Senate credit appearing STC return and credit balance in Tran 1. This, as I mentioned to you, arose for two reasons. One is that the government, as per rule, was required to wait till the manufacturer or a person has filed REG 26 for obtaining a final registration. For the provisional registration was granted by the government automatically from one of the various registrations the person hold. As on 30th June 17, if a person in the state had 3 registrations, as I mentioned by excise duty, and then the one of the registration got the provisional registration, balance 2 did not get the provisional registration, and therefore government data only had the one factory as a place of business, and other 2 factories are not reflected. So when the person filed the return, Tran 1, he reflected all the 3 closing balance of all the 3 factories, but Tran 1 picked up only the one which was registered, for which the provisional registration was granted. Now, had the government waited for a person to file REG 26, in REG 26 there is a specific column where a person is required to declare all the place of business, and this would have been declared there. But then everybody got the final registration without waiting for REG 26, and therefore the government database did not have that much of place of business in against the registration, and hence it was not permitted. The other problems are coming up in interpretation. In case of credit of stock of input, a work in process and finished goods, there are 2 issues which has come up, or 3 issues. In construction building, now as on 30th June 17, you have certain part constructed buildings which are work in process. This rule permitted that whatever cement and steel you have utilized or other input services utilized in making the construction of the part amount, that amount will be allowed to be carried forward. Because ultimately, when you sell these premises under construction, you will pay the GST on the entire amount, that is whatever is constructed prior to 30th June and whatever is constructed subsequent to 30th June, because the sale had taken place subsequent to 30th June. But the government, many state government and the central government also has taken a view that the under construction premises on 30th June is neither a goods nor a service. It is a immovable property, and hence the credit of that cannot be permitted. And therefore, the number of so-called notices have been issued to the various builders again for denial of credit. Now you see, this has been dealt when you look at the Schedule 2 of the GST. There is certain categories of supply which have been classified as service or as a goods. Under construction premises have been classified as services. When the statute specifically provides that this will be considered the supply of service, supply of under constructed, sale of under constructed premises as a service. For the purpose of collecting the tax, you are saying you are providing a service. But when it comes to deny availability of credit, the department says, sorry, this is an immovable property, and therefore the credit should be denied. I think that approach is totally incorrect. People have to go on fighting on these issues. And the third is the second issue is that the invoice on which you take a credit should not be for a period prior to 1 year. So as on 30th June 17, when you are taking credit, your invoice date should not have been prior to 30th June 16. Now, why this restriction is put, we do not know. Now, if you have old stock with you, which is not able to sell, you will carry forward that stock with you. Now, if a builder has constructed something in 15-16 and which is not able to sell before 30th June 17, and when he is able to sell after 17, the department says, sorry, we cannot give you credit for whatever construction you have made in 15-16, because you will show us the invoice of 15-16, the loss is only 1 year. That seems to be unfair. As I said, when you want to implement the VAT system, you have to permit the credit liberally. Only then the VAT system will be effective. Otherwise, the VAT system will collapse because of the restrictions being put in. Gujarat High Court, in case of Philco Trade Center, has held, in case of your dealers, that it is 1 year restriction is unconstitutional, unreasonable, and for that should be not enforced. But that judgment has been stayed by Supreme Court. Bombay High Court has held against it. Bombay High Court has said these restrictions are reasonable, and this is you cannot go on carrying forward the credit on this. Then another problem comes up is the availability of invoice. Now, this is a very serious problem. You see, one has to understand the manner in which the business was moving prior to 30th June 17. You had the tax of excise duty, and excise duty was charged on manufacture of goods. As a manufacturer, suppose you had a factory in Gujarat and depot in various places, say Haryana, Delhi, Rajasthan. Now, one way is that you have transferred goods directly from Gujarat to these depots. Then naturally the excise duty paying invoice will be available at the respective depot. But other is that the invoices, you have a what you call is mother depot, where the goods from various factories come there, and thereafter they get distributed to the various depots. Now, when all the goods come to the mother depot, the excise invoice will also be available at mother depot, and when they get distributed to the other depots or other locations, then naturally there will be no excise invoice prepared, because there is no manufacturing activity available at the depot. This happens in pharmaceutical company, in cosmetic company, in so many companies this happens. The question that comes up when you are taking a stock credit under section 114(3) for the stock lying in a depot at Haryana and Delhi or other locations, you will not have the duty paying document substantiating the duty at that address. The duty paying document is not available with you. But however, the duty paying document is available at the mother depot, where you can correlate that these goods have borne the excise duty payment. Many companies have taken a view that as long as where you can substantiate that the credit that the duty paying document is available at the mother depot, you need not worry about the location of the document. You have to avail the credit because it's a substantive right. However, many have taken a credit and they are facing a problem in the availment because of the fact that the duty paying document is not in their name. Then input and input service in transit, but there is no transit provision made for capital goods. Now there can be capital goods which is in transit. Some capital goods have been purchased in 28 June, since cleared by manufacturer in 28 June, and then sold, received by the manufacturer on 2nd July. You have made the provision for input and input services, but you have not made similar provision for the capital goods. Again, people have reflected in 3B and taken a credit. Let us see what happens in the first amount. Same way in case of fixed amount, fixed rate or fixed amount, the duty paying document may not be available in each location. To give an example, suppose you have factory in Baddi, you are manufacturing the goods which are exempted, and exempted goods you are then transferred to other depots at Delhi, at Chandigarh, or at say Madhya Pradesh, etc. You transfer that goods. The exempted goods are lying at these depots. Now, after GST, those will be charged to GST after July 17. They will be sold, they will be charged to GST, and that GST will be payable when you make a supply. The question that now has is whether the input services used in the finished goods, which were earlier considered exempted goods, can the credit be taken? And if yes, as per the VAT system, the credit should be allowed. But if the credit is taken, then duty paying document is not available at the respective depot. That's another challenge. But some have taken, as I said, the view that duty paying document is available at my factory in the depot in the Baddi, and therefore I will be able to claim the credit of these things. These all matters needs to be now sorted out at various levels. ISD, this is a big issue. As I said in my earlier speech, that input service distributor registered person, you are required to declare information 7B, table 7B. The 7B required the invoice number, date, description, etc. to be declared. This only means that whatever invoices you are not reflected in the return of 30th June of ISD, those invoices you could reflect in 7B. But what happens to my closing balance? It is impossible for somebody to distribute all the credit balance as of 30th June and on the same day. Therefore, still there is no clarity as to where they taken a credit of these. And in some companies have seen that their ISD balance got reflected in GSTR 6. Once it got reflected GSTR 6, now they are not able to distribute their credit because again 668 is not reflecting. These are real glitches problem. I don't know how it will get resolved. Then transfer of credit by when person was centrally registered, that again is a problem on the fact that portal issues. Portal did not clarify how, although the law said that you can distribute this credit to any place where you like, any registered person where you like with the same PAN number. But then after having said that, we have to reflect that in the return, in the Tran 1, and how to reflect that. Either you should reflect a consolidated amount or bifurcated amount. If the certain guideline would have been available for this, for the manner of filling up Tran 1, then possibly these issues could have been avoided. Many companies are facing the issues on the reversal of credit due to non-payment. As I said earlier, all the law, these inputs, the law provided for service tax that you have to make the payment within 3 months from the date of invoice, and if 3 months you are not make the payment, then you would reverse the credit. And after reversal of credit, if you make a payment after 1 year, 2 years, whenever you make a payment, you will be allowed the credit again. But this was in the new section 149. This was got restricted that you have to make the payment before 30th of September. That is 3 months was permitted. Now in the cash flow economic situation, cash flow crunch was there. And as I explained to you, many were not able to claim the transfer the credit to their new system. And with the result, they have to first decide on the making a payment of the tax amount under GST. And therefore, this amount have not been paid. Now one will have to wait and watch whether what the court have decides, whether these restrictions can be placed that you pay within 3 months, when earlier law did not provide such a restriction. Deemed credit in the tax on the stock of goods in hand, the deemed credit is if you have the duty paying document, you are availing the credit as per duty paying document. But if you are not having the duty paying document, for the reason I already explained, that depots goods were received from a mother depot, etc., then the law provided for deemed credit provision. And they said you have to sell the goods within 6 months. If only the 6 months you are selling those goods, the deemed credit will be permitted. Now, if you sell the goods after 6 months, then naturally the law did not make any provision for the purpose of permitting a credit. And that is how the credit got denied to many companies, because the there was slow moving stock and all that. The section 140 explanation has been amended. You see, section 140 has the explanation which define the eligible duties in explanation 1, 2 and 3. And one of the entry was the credit balance of additional duties under Textile Cess Act 1978. This was allowed to be carried forward. This is mentioned as eligible credit. So people have taken a clue that when you are taking this as a cess, you are allowing a cess as a credit for migration, then why not permit education cess and other cess also? The government then amended the law. They realized that this is creating a problem, and then amended the law in the retrospectively from 2017, which said that even textile and textile cess will not be permitted. And specifically it was clarified that these education cess, C cess, etc. will not be allowed, is not considered as eligible duties. This amendment has been made in section 140. Whether this will apply in section 142, where the refund mechanism has been made, is what we wait and watch, because people are contesting that, all right, if you made the retrospective amendment, I will not carry it forward, but grant me a refund, because you are not still saying that I am not eligible for credit. You have not made a lapsing provision. And once you have not made a lapsing provision, whatever credit you are not permitting, allowing to carry forward, you must provide the refund of that. Let us, the exact implication of this refund, as I said, tribunal has rejected this refund application for cess. Therefore, if the ultimately government does not budge, and the Gujarat High Court judgment in Sutherland's cases is not upheld finally by the division bench of Madras High Court, then possibly we'll have all roads will be closed and people will have to write off this amount in the books of account. Friend, these are some of the issues which are there, which is coming up in transitional provision. And now, if you have any questions, we can definitely answer your questions. And Sunil, you are there?
Yes, sir. Yes, sir, I am here. So we have tried to give answers to the attendees during this session. I have picked few questions for you as well. I am asking questions, so request your views on the same. So one of the attendees has asked that whether the judgments of Honorable Delhi High Court in case of brand equity and Madras High Court in case of PK Mani's Electronics would be binding on the GST authorities in West Bengal, that is other territory.
No, actually the law is like this. If on any issue you have one judgment of High Court, one High Court, and there is no contrary judgment of any other High Court, then it applies to all over India. So if you have suppose only brand equity judgment would have been there, then you could have applied to Calcutta also, because there is no judgment contrary to that. But now you have a contrary judgment. Delhi High Court says it's a vested right, whereas the Chennai High Court says no, it is not a vested right, it's a concession. And same way, Bombay High Court also says it's a concession, it's not a vested right. So therefore, you can't apply. Calcutta High Court taken a view, any view which they like. So straight away you can't apply this.
Sure, sir. The another attendees, Mr. Vivek and Miss Arvinda. The question is, can we claim refund under earlier act if Tran 1 credit is reversed? Mr. Vivek said that jurisdictional officer is suggesting apply VAT refund, then Tran 1 filing. When he has filed the refund before the authorities said that refund cannot be granted as the matter is pending before appellate authorities. So how should he proceed?
See, actually, refund, because we have a different VAT statute in different states. You have different service tax, you have excise duty. If you are applying in the respective refund under the respective act, the provision of that act needs to be seen, whether that act permitted the refund. For example, in central excise, the act or rules never permitted a refund of the SENVET credit, except when the SENVET credit accumulates on account of exports. Now, if you can't substantiate that my credit is on account of exports, then you cannot reflect. You'll say, under what provision I grant you the refund. And that is where the problem will come. So if you are going under the VAT Act, you have to first show that in the VAT that was permissible. Refund was permissible. If you can show that, then you can get the credit, get the refund. Otherwise, only 142.5 is a better option to go, because 142.5 specifically said if credit is not given, you allow this refund to be allowed. And that was the tribunal also consistently held, that if you are not permitting the credit, you allow a refund. How can you just withdraw his rights? That is how I would suggest you apply a refund in the new section, not the earlier sections. Yes,
sure, sir. There is one more query. Mr. Bhavni has asked that while in Tran 1, there was a technical and directly taken the credit in GSTR 3B. So after brand equity judgment, if it is upheld by the Supreme Court, what would be the scenario? Will there any issue in this case or not?
See, whether brand equity is held or not is a different matter. I would say even otherwise you'll get it, because ultimately you have not filed one form, but you have filed another form. See, your Tran 1 is also some information you are declaring. In GSTR 3B also you are declaring information. So you are right here that the right which you had the claim, you already exercised to avail that credit. So therefore, I feel you stand on a better footing to say that I am entitled for a credit. All that tribunal and others should say, all right, he has not filed Tran 1. He has filed 3B. To verify whether he is entitled or not. Why you are insisting on that particular form only? That form is not that sacrosanct. Ultimately, you want to see that whether he is entitled or not. And that is where the courts have to take that approach. So whether it's a vested right or not, vested right is when you have not at all taken a credit up to June 20. Then you can say. But even if it's a vested, not a vested right, still I have not filed one particular form, I have filed different form. So can that credit be denied? In the past, it has happened that if you are providing the same information by different route, then you should be allowed the credit. But then every time you have to go on fighting with this, there's no end to that level. So my opinion is you stand on a better footing, even if brand equity is not upheld.
Okay, sir. There is one general queries of the attendees that many of them had taken excess credit in Tran 1 and they have reversed the credit under GSTR 3B post GST. So is there any interest implication which would come the GST regime?
Well, it depends whether utilize or not utilize. If you are not utilize it, then it will not come.
Okay, sir.
If you are not utilize the credit, then it will not come as this thing. Interest is not required to be paid. This we have been fighting in excise also and mostly succeeding. Yeah. Any more queries, Sunil?
Okay, sir. We have done with the queries.
Ah.
If there is any query left, the attendees can send your queries to sales@taxman.com. We would answer the same. So thanks for the today's presentation, sir. It was very
Thank you.
nice.
Thank you.
Yeah.
Thank you very
Thanks to
much.
all the attendees.
Yeah. Thanks. Thank you.